Let's bring in Patrick Scholes, Managing Director of Lodging and Leisure Equity Research at Truist Securities. Patrick, good evening. This was supposed to be a big recovery period coming out of Omicron for business travel, for international travel. How much does this war between Russia and Ukraine set that back?
Well, I would say for business travel, at least domestically, so far we haven't seen much of an impact at all. Certainly upper end business travel, the higher end corporate business still, is still severely depressed. But we have certainly in the last couple of months seen signs of life with the the small and mid-size businesses. So, so far, I would say domestically really haven't seen it, but, we'll see what tomorrow brings.
What about the spike in oil prices and what that tends to do to demand for travel and consumer spending, which was really robust?
Yeah, it's every company out there is going to have a bit of a different exposure and a different impact. Certainly for corporate travel, it's never been a huge impact. That said, there's not a lot of corporate travel high end going on. On the opposite side, unfortunately, where it is really going to hurt you the most, and I don't mean to come on here again and be a Debbie Downer about the cruise lines, but the cruise lines really get hit two ways. One, especially with their mass market customer, that hurts your pocketbook or your discretionary income. And this is the average household income, $60,000, $70,000 that goes on a Carnival Cruise Lines. And then secondly, their second biggest component of their cost is going to be fuel. And just as a matter of fact, I would say over the last 3 or 4 days, back of the envelope, I would calculate that a company like Norwegian, which is a high teen stock right now, is seeing almost a $6 per share hit to their share price from oil going from 90 to 120, assuming it stays at these levels. So really getting it, as they say, if the thunder doesn't get you, the lightning will. And unfortunately, cruise lines are sort of right in that bad spot.
Airlines got slammed today. Hotels were down sharply. The subsector down 8%. There's also the question about exposure to Europe because their economy is feeling it worse and what that looks like for the industry. Where are the interesting investment opportunities in your sectors right now?
Well, I would say on the long side, stay domestic and stay higher end. Actually, I met with a number of the vacation ownership companies last week, and two that I'm very favorable on are going to be the more higher end companies. These are companies that have average household incomes of above $140,000, $1 billion household net worth. And that's going to be, say, Marriott Vacations, that symbol VAC, and also Hilton Grand Vacations, HGV. So definitely a more affluent customer, it's not that everybody is immune from gas prices, but certainly $1,000 hit to your household budget going to be less impactful. These companies have very minimal international exposure as well.